Time to go bundu bashing now. Wilderness Holdings released its interim results for the 6 months ended 31 August 2011. Highlights include an 8% increase in group revenue to 576 million bula. Headline earnings down 46% in report currency but up 2% in constant currency. An improvement in the net cash position to 228 million bula compared to 161 million bula for the same period last year.
Wilderness market cap of R1 billion, price earnings 38, dividend yield 2. They were the second company to list on the African board. There are only 2 there still now. Tshepo, let's start with you. Yes, bed night sales up 5%, revenue per bed up 8%, looks great. You bring it back into currency and they just get, I mean, what they're down 46% in report currency. I mean, they get killed by the currency.
They do. But I think I think it's a little convenient just to blame the currency, to be fair. I think if you're looking at their business, it's really geared to what the global economy is doing.
Americans and Europeans.
Americans and Europeans, and we know the situation around America and Europe in particular right now. So I'd expect a lot of those numbers as reflective of the current global environment. For sure, the currency has hurt, or rather, it hasn't helped. But the currency movements over the last month or two probably will correct that number going forward.
Anthony, I'm probably doing the obvious given the fact that they're an investment holding company, but could you give us your take on the valuation gap of Wilderness?
Okay, so here's a company that reports in Pula, that earns its revenue in Namibia, Botswana, Zambia, Zimbabwe, South Africa, and the Seychelles. And then it prices those in dollars. So, you know, and it's almost, as a result, I think it's almost impossible to kind of do a 3-year earnings per share forecast. You know, it's also dependent on currencies, you know, in terms of costs. It's dependent on whether they can sell bed nights. And then it has 3 areas of revenue, obviously bed nights, and then it does transfers, and it does safari consultancy and, you know, travel agency type business. So you know, you talk about moving parts. This has got multiple moving parts. And, you know, if you do like the story, at the end of all this work that you've done, you can't really buy the shares because it's so illiquid. So, you know, I question why this company is listed anyway in the first place.
And I mean, the liquidity is absolutely a huge issue. I mean, and there were 2 sellers for probably not even 10,000 rands worth of value at the moment in the market when I checked earlier. The currency is the huge thing. I mean, they could manage it, I suppose, with hedges, and I suppose they're saying, no, they're expensive or something, but I mean, the currency is just going to create massive seesaws in their revenue. Some years boom, some years bust.
Yeah, I mean, to answer Rifuwe's question, I don't know what this thing's worth, and I don't think anybody knows what it's worth. I don't even think management know what this thing's worth. So if you generally like the theme of safari companies and, you know, lodge owners in Africa, you know, maybe you can take a punt and close your eyes and maybe it'll be worth something down the line.
Or buy a lodge.
Well, Tshepo, they didn't declare an interim dividend, but they said that should one be paid, it will be done annually in May. Let's get your take on the company's dividend policy of between 2 to 3 times net profit after tax relative to their peers in the hospitality and leisure sector. Does that sound like a good call?
Sure. I'm dancing a little bit. Off the top of my mind, that dividend doesn't scream a great dividend payout or a great dividend yield as a whole. So in terms of that, yeah, you wouldn't buy this as a dividend play. Just to say that. Cash flow on their side is I guess improving and impressive, given cash flow of 200 odd million on a market cap of R1 billion, so 20% of that market cap is sitting in cash. So from that perspective, it talks to a well-capitalized business. But I'm with Anthony. It's difficult to say whether that implies significant upside or not, given the business model, in particular how the currency is structured.
And what you're saying in English is that it's not hot.
Well, at a PE of 38, you're pretty much ruling out the value guy on a normal basis. But given the difficulties, I'd say it's definitely not hot.
Definitely not hot. Anthony, I suspect you're going to echo the same sentiment.
I concur.
You concur. Simon Brown, their primary source markets are the US and Europe, and they keep talking about mitigating the risks that these economies are faced with. Are they alluding to tapping into the BRICS nations, or do the Chinese and Indians and Russians not really savor African safaris.
I mean, look what Richmond's doing in Asia. So certainly we know that there are people there with large amounts of money who will pay crazy amounts for a watch or a pen. Whether they want to come to Africa, I'm not sure. I would love a nice 5-star luxury holiday, and I like their costs are largely fixed, but that currency just scares the heck out of me. Some years it's going to make it wonderful, some years it's going to take them out at the knees, and frankly, which years are going to be next year? So for me, stay away, not hot.
Stay away, not hot. Let's turn up the heat with our guest hot stock picks. Anthony, you have chosen what stock for us and why?
I've chosen Super Group, which is a company that is in the process of being turned around very successfully by its new management team. But the real reason why we like this is that it has a very attractive balance sheet. This is a balance sheet business. They basically buy assets and rent them out. And balance sheet businesses typically have debt on the balance sheet. This company generates huge amounts of cash, about 1.2 billion rands of cash a year, and very shortly is going to have no debt on its balance sheet. And as a result, there's a huge opportunity to buy back about 30% of the outstanding shares. So we think the balance sheet is overcapitalized and ripe for a massive share buyback. So if they buy back shares, we think that we think they'll do about 30% of the outstanding shares. That'll have a kicker of 30% to the forward earnings per share. We think they can do 15 cents to June next year, and that puts them on a forward PE of about 6.3. So we think the Super Group is very exciting from a balance sheet restructuring point of view.
Super Group is super hot from a balancing restructuring point of view. Tshepo, you've gone for Steinhoff. Tell us why.
I have. I'm going the other way around. Usually you talk about developed market counters with emerging market exposure. This is an emerging market counter with developed market exposure. In terms of Steinhoff's strategic positioning, what you want is a company that will do well in spite of management, right? So you want one that, regardless of what management ends up doing or buying, is actually going to do well. And I think the business model around Steinhoff is precisely that. You don't extrapolate anything about management. I actually think management's doing a pretty good job here. I think the Conforama acquisition in France has given them a very unique exposure in terms of low-end consumers in Europe. And then if the assumption is over the next 10 years or so, Europe is going to go sideways, I think, and we're starting to see this already, Conforama is actually gaining market share in that type of environment. So from a strategic perspective, I think Steinhoff is very well positioned. In terms of valuations, on a PE of 10, a dividend yield of I think 4, you're talking really, really good value, as well as really, really good strategic play. So from my perspective, that's the hot pick for today.
Steinhoff is hot with Tshepo. Simon Brown, give us your take on Steinhoff and Super Group.
Steinhoff always confuses me. Then I started to understand it. Then they did a deal with CAP and they did a deal with JD Group, and they've left me confused again. The values are nice. Europe, I'm going to say thanks, but no thanks. Logistics companies love them. Super Group certainly was a disaster, but they've turned it around. They're printing cash. They look good.